Okay, well, first of all, it's my great pleasure to welcome you all here tonight to this JP Equity Go for Gold event. Can I start by welcoming the man with the plan, the owner and founder of JP Equity, Jason Skinner. Where are you, Jace? Right behind me there, Jason Skinner, ladies and gentlemen. By way of introduction, for those of you that I don't know, Matt Burney is my name, and I'm the founder and managing director of Bulls and Bears. Many of you, I hope, would read the stuff that we write for ASX-listed companies and publish in the West Australian newspaper, the Business News, the Sydney Morning Herald, the Melbourne Age and the Brisbane Times. And can I also recognise my colleague here somewhere, editor of Bulls and Bears, Steve Butler. Where are you, Steve? Over there with a beer in his hand, as usual. Look, folks, can I also just make mention of our sponsors for the evening? First of all, Lexus of Perth. For those of you that came in that way, you missed a trick, because over that way there are some magnificent Lexus cars for your viewing pleasure. There's a minivan, which Steve might be right at home in. There's also a four-wheel drive and a sports car that's painted a green that I don't think I've ever seen before, but I think I want everything that I own to be painted that colour. So do yourself a favour and go out there at some stage during the evening and have a look at those magnificent three Lexus vehicles. Can I also thank and welcome the owners of Shelter Brewery. Who's been to the Shelter Brewery in Busselton? By any measure, an extraordinary development on the waterfront down there in Busselton. You're drinking their beer tonight, so thank you very much to the Shelter Brewery. If you haven't been there, you've got to go there. That Busselton foreshore is just amazing, and this Shelter Brewery is really the anchor tenant along that foreshore. So, folks, tonight we're going to be talking about gold. And what I can tell you, at the Bulls and Bears office, we've been lamenting the disconnect between those companies that are exploring for gold and those companies that are mining it. Those that are mining it are making a poultice amount of money with historical high gold prices or thereabouts, but yet there are some fantastic companies right on the shoulder who are in that development stage who ultimately are going to be gold miners, and some of those are here with us tonight. And so please have a good listen to our presenters tonight. Have a good think about what stage of their journey they're on. And I think you'll all find that at the end of the evening, these are three quality gold companies that are certainly worthy of your consideration. The first one I'd like to introduce, or the first speaker I'd like to introduce, is Simon Lill. Simon is the non-executive chairman of De Grey Mining. He joined the board of De Grey in October 2013, becoming executive chairman in 2014, a role he held until May 2020 when he transitioned to non-executive chairman. Through this period, he's shared responsibility for maintaining and increasing the tenement package that forms the basis of the De Grey projects, and more specifically, the wonderful Hemi project that sparked a gold rush in granite. For many years, geologists and others just sort of drove over the granite to get to the greenstone. Well, this company changed all that, and I'm delighted to say he's here to tell you about that journey tonight. Ladies and gentlemen, please welcome Mr. Simon Lill from De Grey Mining.
Okay, thank you, Matt. It's nice to see you all, except I can't see you because there's a big light in my eyes, and I hope you're all warm enough out there. I have already given a presentation today. I was at the WA Mining Club, and they had 450 people there, and I came here thinking this would be a lot more relaxed, but I'm told there's about 350 of us. So I will say well done, Jason Skinner. You've come a long way in the last couple of years in terms of numbers. Hopefully you're all here because Jason and Dan got you into De Grey a few years ago when they were doing a bit of roadshow work for us, and our stock was probably 3 cents or so, and our market cap might have been $10 million, and you would have made very, very good money if you'd got in at that time. And not everyone's been fortunate enough to have had that. I have been one of those that has, and it's been a terrific experience for me. So with De Grey, the presentation I gave today was actually about the excitement of the discovery, and it was a bit more fun. There's a lot more metrics here. It's a type of presentation my managing director, who is here, Glenn Jardine's been giving to the institutions. I'm probably not as practiced at this, so if I have some pauses, that will be why. I had 10 minutes to talk to the mining club. I took 22 minutes, so hopefully we can get through it a bit quicker than that so we can get on to the next speakers. So we'll move on. Here we are. So disclaimers, you can all read that in due course. There's nothing new in this presentation. It's all been on the ASX over the years and over quite a long time. Acknowledgement of country. I don't believe I need to read all of that. I will just note the Yarra people are the first people mentioned there. We have a mining agreement with them. We've had a very good relationship with them and retain a good relationship with them. Our project is only on Yarra ground. That's the Hemi deposit, tailings, plant, waste dumps, etc. Only on Yarra ground. So we don't have any native title problems at all. So we thank them for their help and support, and we look forward to a long, fruitful history with them moving forward. Corporate overview. In years gone by, when I was a broker all the way back in the 80s, you wouldn't touch a company with 2.4 billion shares on issue, which we now have. Oddly, big North American institutions don't seem to be that fussed about it. It all goes to your market capitalisation, which, as you can see on that slide, we're currently at 2.5 billion, so we've come a long way from the 10 million. We would think we're cheap at this point. We've had a bad few days, as has the gold market overall. Cash at bank as at 31 March is 319, and you can see, and those of you who would follow us, we just had a fantastic raise at 600 million, and we would now have over $900 million, although the rapacious brokers took quite a chunk of the fee, of course. So, but anyway, it's and I do say, and my colleague Peter Hood is here with me. A few of my colleagues are, but Peter and I were on the board at 1st of July 2019, and I say we had $100,000 in the bank. He says we were minus 150. So to suddenly have $900 million come 1st of July this year or thereabouts is quite remarkable. And you can see in the major shareholders there, top 100, top 50. We have a very, very strong institutional register. Big shareholders, put the money in at 600 million. They had contributed the 300 million. They knew they had to come again for the next raise. So we have the equity we require to build this project. We don't have a problem with getting the debt. We haven't announced that at the moment, but the debt is a lot easier now that we have the equity. That would have been a condition upon it, but now that we have it, we do have debt providers very comfortable with us. And it's interesting actually, because a gold project of this quality and size would normally sit in a Newmont or a Newcrest, although Newcrest doesn't exist anymore, and the banks wouldn't get to see it. Whereas with us, they're getting to see a quality gold project, and they're very keen to be part of the financing. So the Pilbara New Gold Province is an interesting, quirky little slide. It's like somebody got in their wheelbarrow, went from Ballarat to Bendigo to Bathurst, all the way around the top end of Australia, via Mallina and Tauranga, and then down to Coolgardie and Kalgoorlie. Probably would have taken them 50 years to do that walk. The interesting thing there is that Mallina and Tauranga are on our project area. They were mined back in 1988, and they were two of the first mines in Western Australia before people had discovered Kalgoorlie and Coolgardie. There wasn't a lot mined, but what would have been mined was, of course, high grade. Tauranga is quite important to us in that it's really how we discover intrusions at Tauranga. Mallina, we still have the mine on the site. We haven't yet been able to drill it, which I think we're not far off. We're waiting for the station owner's approval. And again, that should be high-grade material. Any of these mines from that period, they're not mining grams per tonne. They're mining ounces per tonne probably, or half ounces per tonne maybe. The rock on the right, it's quite a funny story. If you go to the Treasury building, to the Post restaurant, there is on the wall there that section there that says gold discovered at Mallina. Jim Withnell picked up stone and threw it at a crow. And the Treasurer General of WA came back and said, what became of the crow? The reality was that the rock broke and they found gold at Mallina, and that was the importance of it. But that's just some nice history there that we have, and that's on the wall, as I say, at Post in the Treasury building. Now, some of the excitement that I had 17th of December on the far left there, we had some air core results that those of you who have drilled air core looking for gold, you get a bit excited if you've got a couple of metres at 0.2 grams per tonne. It's an anomaly. 43 metres, I mean, you can read them, 3.7 grams per tonne. It's shallow because it's air core. They are just outstanding numbers. Market did not react. You could have bought as many shares as you wanted at a $20 million market cap. We went to Christmas that year being pretty happy. We knew we were onto something, scratching our heads, why haven't the market reacted? And as soon as the new year started, we get our RC rig up there as soon as we can. And in February, we then get the next set of results, which, as you can see, Hemi confirms potential for major discovery. Again, just outstanding results. The market starts to react, and we saw North American institutional buying at that point, which is astonishing too. But people who are clever and know gold could see that we're onto something. Then the next set of results, early March, again, and there's a number there, the top right, 93 metres at 3.3 grams. And our GI, Andy Beckwith at the time, we presented that to the ASX, and we had the whole 93 metre intersection there. We showed every metre, and there would not have been 1 metre that was under 2.5, and probably no metres that were above 4. The point being that this was an amazing, consistent intersection, and that it wasn't being carried by a 200 gram per tonne metre or anything like that. So, that's when the market for us really did start to move. Stock was probably 28 cents, 30 cents. And by the end of the year, and I get up at the Diggers and Dealers in 2020, accepting the award for the best emerging company, and made the comment that imagine a mug like me being in charge of a $2 billion company within 6 months. That is how much the market reacted to these results through that period. Alternatively, of course, it's that our Managing Director, Glenn Jardine, joined us in May, and that might have had something to do with it as well. So well done him. Anyway, so the Pilbara, we've had different board members come through. One of the things that a chap called Ed Esches, who's probably a well-known name to some of you, well-known gold geologist who spent a lot of time in Kalgoorlie, and he said, there's no reason there's no gold in the Pilbara. It's the Pilbara Craton's the same age as the Yilgarn Craton, same rocks, same greenstone belts, etc. You should find gold there. And he was very positive about try harder, look harder, be aggressive, there'll be gold there. And I give him a lot of credit. So we are now a plus 10 million ounce gold discovery in 4 years. And in probably 2 of those years, we've hardly drilled in an exploration sense. So there's going to be more there. We're a tier 1 project. Everyone defines tier 1 differently, but we're over 500,000 ounces per annum in very much a tier 1 jurisdiction, which is Port Hedland. It's got everything you can need. Water, power, we've got 2 main roads, mining services, a port, which is very handy for us in terms of bringing in some of our capital equipment, and I think also quite handy for us with some of our upside in terms of bringing in concentrates for our POX plant. I'm going to be running out of time, so there we are, tier 1 mining industry region, so we did just discuss that. We've done a DFS, it's all from the Hemi project. We've got 2.2 million ounces outside of Hemi. We will be showing study results soonish about that as a standalone project. But the 550,000 ounces per annum in the first 5 years production profile through the DFS makes it in the top 5 gold companies in Australia, probably top 3, or gold projects, I should say. And it will be one of the top ones in the world. It will be, people keep saying, when are you going to be taken over? It will be very keenly sought after. We don't intend to be taken over. We intend to build it, and we're building a team with the capability around to build it. So at the risk of, I would like to be saying more, I'll just flick through these to see. Oh, you do need, so they do need to see this slide, and then I can finish. Okay, so just to get, look, we're not the biggest project in the Pilbara. The iron ore projects, the gas projects are huge, but we are a big gold project, and it's just to compare it to what it looks like compared to Perth. Anyway, look, this shows the scale of what we've got. The the pits, the pit shells that we've got, the size of our starter pit Brolga, and pretty well, as you can imagine, it goes from Optus Oval, covers Perth completely, and it does show that there's a lot of gold outside of those pit shells too, which is what we're also working on. So the project is going to get bigger, unfortunately, and I don't know, Glenn or Tony, whether we can actually put it up on our website and have a video up there that people can see.
You should find some gold up there, they said. 10 million ounces, how about that? The other thing they often say is timing is everything in this business, and how exquisite is De Grey's timing. I think the gold price topped out probably last month, was it, at about 3,700 Aussie or something like that. How long ago was your discovery hole, Simon, roughly?
4 years.
4 years. So who would have predicted in 4 years' time from that discovery hole gold would be at its historic highs? So fabulous timing. Well done to you, Simon. Good stuff. Okay, so our next speaker tonight, ladies and gentlemen, is Alex Rivera, Managing Director of Brightstar Resources. Alex is a geologist. He holds a Bachelor of Commerce, Corporate Finance from the University of Western Australia. And for the past 9 years or so, he has worked as an investment banker, mostly for Canaccord. Many of you would know him from there, and mostly in the metals and mining sector. He was appointed Managing Director of Brightstar in January 2023. Ladies and gentlemen, the Managing Director of Brightstar Resources, Alex Rivera.
Good evening all, and thank you for joining, and thank you very much for JP Equity and Jason Skinner for the opportunity to present. I'll get off Simon's video and work through. Doesn't work, it's a PDF. So Brightstar Resources is a West Australian-focused gold producer, developer and explorer. This business is the culmination of a number of mergers and acquisitions over the last few years focused in the West Australian goldfields. We've been managed to pull together through a series of transactions just short of 1.5 million ounces of resources of gold. All of that's located on granted mining leases, previously disturbed areas, previously mined areas. And really the business is now established with the people and the assets to build what should be a mid-tier producer in the coming years. We are currently a producing miner through the Second Fortune underground gold mine, which is located south of Laverton. And really our business is focused into two areas, what we're terming the Laverton Hub and the Menzies Hub. As you can see on the map there, the Menzies Hub, fantastically located. It's a pitching wedge from the Goldfields Highway. It's 100 k's north of Cal. You know, the infrastructure and access is fantastic. We've got just shy of 600,000 ounces of resources there. Menzies is a fantastic kind of historic goldfield. Historically mined 800,000 ounces at just shy of 20 grams per tonne. So a great goldfield, historically underexplored in recent time, and we recently completed a small-scale mining campaign there earlier this year, where Brightstar mined about 8,000 ounces. So between what was previously Linden Gold, which we recently acquired, and Brightstar, you know, we've produced over 20,000 ounces this fin year. And what we're seeking to do is work these projects through towards a position to be making an investment decision early next year to the restart of these assets. What we think success looks like is a low capex pathway to being a 100,000 ounce producer. In this market, I think we can all agree, access to capital is challenging, debt's expensive with interest rates. For us to have a business model that is predicated on a low capital hurdle into production, I think sets us up really well if you're looking at, you know, West Australian gold developers. The assets themselves have been really underexplored over a number of decades, really just due to the corporate history of these businesses. You know, the Laverton Hub up there in and around Laverton sat within the Brightstar portfolio for a decade without any production whatsoever, or any exploration, I should say. The recent assets from the Linden Gold acquisition likewise had minimal exploration history, characterised by, you know, private ownership, tough, difficult access to capital, and really a lot of embedded upside. So with 1.5 million ounces of resources now, we're very comfortable that grows, you know, quite substantially. We've built out the team to do this. We've got a fantastic exploration and development team, you know, some excellent geos and engineers, and really looking to take this from what is a small scale producer now into something a lot more substantial. Importantly, we do own our own infrastructure. We've got the Laverton processing plant there in the centre of that Laverton hub. Within that kind of radius, which is 75 kilometres, we've got just shy of 900,000 ounces. So we've got the critical mass to refurb and restart our own infrastructure, and we've got substantial resource portfolio to build. Just touching on the corporate overview, it's roughly a $70 million market capitalisation with $20 million in the bank. We've got a $50 million EV. Importantly, in the last 18 months, this register has significantly changed. When I joined this business in January of last year, there wasn't one institutional shareholder. We're now about a third owned by long-only resource funds. And I think being able to bring those kind of investors along for the journey into a market cap that arguably was too small for their mandates, I think speaks to the team that we've built and the assets. So we've got a great supportive register. St Barbara, the ASX-listed gold miner, is our largest shareholder. They own just under 13% of the business. Extremely supportive, strong balance sheet. They've got $250 odd million in the bank. They're very excited to grow with us, and they're a great shareholder to have on the register. The recent consolidation for us was extremely logical and synergistic. The word synergies gets thrown around in M&A a lot, but it truly was synergistic. A lot of those assets are extremely close to our infrastructure. It formed the combination of a producing asset with a series of development stage assets. So again, gives us that organic profile to really extend from being a small scale producer into something of scale. And I think for us, that's the most important thing here, is that we can build this, we can fund it, we've got the team to execute it, and these are very advanced stage assets. We've got the right skill sets to do so, we've got a good balance sheet, and we've got the team to execute. This is just focusing on the Laverton hub, which is really where the bulk of the net asset value lies of our business. It's, for us, the ability to turn back on that plant and get a series of these deposits into production is what's going to build this business. If we can be a 100,000 ounce producer within 18 months, this company will look a lot different to what it currently does. We're currently a $50 million enterprise value. 100,000 ounce producer should be capped at about 500 million. So really that's the upside. That's what we're playing for. That's the why. That's what we're doing. What we're doing is really to kind of capture that upside, which we've got in the ground. So we've got 3 feed sources to feed into our mill. We've got the high-grade operating Second Fortune gold mine, and that's an 11-gram ore body, which is coming out of the hole diluted about 4 grams. We've got the Jasper Hills gold project, previously mined, proximal to our own infrastructure, just shy of 300,000 ounces. And we've got the Cork Tree Well project north of Laverton, which is 300,000 ounces. All of those areas are definitely characterised by under-exploration. Second Fortune and Jasper hasn't had an exploration drill hole in earnest for decades. Cork Tree Well, we've put, I think, 27 kilometres of RC drilling into it in 2 years. Prior to that, it sat there for more than 10 years without a drill hole. So there is significant exploration upside for us to advance these assets. All of them are on granted mining leases. We've done heritage surveys, everything's permitted, flora, fauna, etc. So all the things that are existential to our success have been ticked off. We can take this thing forward pretty quickly with the team and the balance sheet that we've got. We don't have to wait for long-term kind of converting an exploration licence to a mining licence, etc. So the key red flags, permitting's achieved, heritage, everything's kind of ready to go. So for us, it's really just building the team and working towards this to creating a mid-tier producer. These are a couple of studies we've put out to the market. We are in the process of putting out a consolidated feasibility study. We're hopeful to have that out by the back end of this year or early next year. And really that's going to be the backbone for making FID to build these projects. But what it shows is that we can produce nearly 500,000 ounces of gold over 8 years. Low capital cost to do it. In terms of the working capital for these project areas, it's about $34 million. Again, we've got $20 million in the bank. We've got a cash flow producing asset. We've got no debt on the balance sheet. So this is very achievable. This is very executable. And really, it's about using these assets as a springboard for building a proper business. Where there's a lot of exploration upside and also a lot of inorganic opportunities in the West Australian goldfields. The capital markets are extremely challenging for explorers. So this business has been characterised by a lot of M&A to date. I think it's still going to be a function of this business moving forward. There is a lot of opportunity out there that I can see. We've got the right team to assess these opportunities and try and execute as we build our own business and looking at other low-hanging fruit in the district. Just touching on the board of management, I suppose importantly here, everyone's new in the last 12 or 18 months. We were very fortunate to secure Richard Crooks as chairman. If anyone knows Richard, very high calibre mining professional. He's been on a few boards recently very successfully. Used to head up Macquarie's Metals and Mining division, ran Owen Hegarty's EMR private equity firm, geologist and investment banker, like real tier one professional. Andrew Rich and Ashley Fraser just joined us from the Linden transaction, both engineers. Andrew's an excellent underground mining engineer and a proper miner. His skill set is fantastic. Ash has successfully run a lot of open pit mining contracting businesses. He definitely he would have what I would term as real world experience. He's seen things go very well, he's seen things go poorly. He knows how to build a company from the ground up, so he's a great value add. John O'Downs is a Ned for us. He's a geologist, but also is the managing director of a gold miner on the ASX Kaiser Reefs. So I think we've got the board and the management team to really execute on our strategy, and it's been exciting to kind of bring everyone into this business. This is what I mentioned. This is what success looks like for us. This is kind of our peer group in what I would say would be our small-scale producers on the ASX. There's names we all might know and love: Orabanda, Pantoro, Calidus, etc. If you throw them all in a bucket, what it looks like is they trade at about $5,000 a production ounce. So what that means is their enterprise values are $5,000 times how many ounces they produce. So if Brightstar can become a 100,000 ounce producer, if we were to trade on these metrics in line with our peers, that is a $500 million EV company, and we're currently 50. So that is what success looks like. That's what we're playing for. That's why we're in this business, is to build a company that looks like this, that trades like that, and that's 10x our current val. So that's what we're doing. We are midway through a 30,000 metre drilling program. This is a pretty serious investment into what we're trying to do, both RC and diamond drilling across the portfolio. There's some brownfields exploration to convert resources towards reserve or reserve classification as part of the feasibility study. There's some greenfields exploration seeking to grow the resources. It's across the portfolio. There'll be a lot of news flow over the next 3 to 6 months. We're going to have 2 drill rigs going, thanks to the great guys at Top Drill. There's a few lurking around, so make sure you say g'day. I expect a discount, boys. But there's a lot of work coming, so yeah, we're really excited with the team and the assets that we've got. This is just a quick development timetable. This is what we're doing. There's a lot of information here, but really the key takeaways is the next 12 months looks like us bedding down the existing mining operations and fast-tracking that development timetable. The quicker that we can bring these assets into production, the more upside there is for everybody, all stakeholders. So it's really fast-tracking the feasibility study, fast-tracking the development of the refurbishment of the plant, and getting this thing going. Year 2 and onwards is really about growth. It's organic, it's inorganic, it's throwing the kitchen sink at exploration. Everywhere you look needs holes. So we're pretty excited to throw the kitchen sink at some exploration and try and build, what hopefully is a mid-tier gold producer in a few years' time. This business was a $6 to $7 million market cap a year and a bit ago. We were a $100 million market cap 2 weeks ago. So it's been significant growth in the last 18 months, and we're pretty hopeful that continues. Spot on. All right, thank you.
It strikes me that it's probably not a bad idea to have both a broker and a geologist running your publicly listed exploration company. So, Alex, I suspect you're pretty well placed in that role. The other thing that's a little bit notable too is that if you look really hard on the ASX, you will find gold or mining exploration companies that actually do have a plant or a mill, albeit it needs a bit of refurbishing. But I tell you what, it's a hell of a lot preferable to those companies that have to spend 100, 150 million or more building a new mill, and Brightstar is one of those. So certainly worth keeping an eye on. Okay, moving on to our third and final speaker for the evening. I'd like to welcome Paul Lepinier. He's the incoming Managing Director of Strickland Metals. Paul led the team that generates and evaluates investment opportunities for Ibera Capital. Some of you may know Ibera, 3 very well-versed guys in mining and financial markets, raised, I think, from memory, about $150 million and put that into a small number of mining exploration and development projects. Paul has jumped out of that role now and is now heading up. So they're heading up Strickland Metals. Now, Strickland Metals is also remarkable because not all that long ago they sold their Millrose project to Northern Star for, wait for it, about $61 million. So a unicorn company that has some serious money in the bank in this environment. So Paul, notably, was also the former manager of exploration at Fortescue Metals. Obviously something you'd put on your wall, framed up, I think, Paul. And without too much further ado, can I introduce to you, ladies and gentlemen, the Managing Director of Strickland Metals, Paul Lepinier.
Thanks, Matt. So it's interesting that Matt actually mentioned about a unicorn project, and I really certainly see Strickland Metals as a unicorn company. It's a rare company. Most juniors on the ASX are generally pretty happy to have one high quality project. Well, as of today, the EGM, the vote was in favour of the transaction to acquire Rogozna. So now, within a couple of weeks, Strickland will own not one, but two very high quality strategic projects. Very different projects, but very strategic in their own way. So in terms of Rogozna, strategic because of its scale. So over 5 million ounces gold equivalent in resource. That's just from 2 deposits. Currently, there's actually 4 deposits. Another 2 deposits aren't even sitting in resources yet. The exploration upside that has been demonstrated over the last few years is huge. We've got drill hits of almost 100 metres at 5 grams that aren't sitting in any resources. It's had over 60 million spent to date over the last 20 years by mainly Canadian majors and mid-tier companies. So this company this project has never seen the light of day on the ASX until now. And it's going to end up being one of the largest undeveloped gold and base metal projects in Europe. And that's really our goal. The next step for this project through Strickland is to really hit it hard with the drill rigs over the next 12 to 18 months. We're going to drill 60,000 metres of resource and discovery drilling and really try and take it to the next level where it's going to be on the radar of all the majors in the world that are absolutely desperate to get hold of gold and copper. Then we have the Yandal project. So last year, as Matt mentioned, Strickland sold Millrose for about $120 an ounce to Northern Star. So this is when gold was about $400 or $500 less than it is today. So any ounces that we can find within 50 or 60 kilometres of a really hungry mill are highly strategic ounces. They're only going to get more valuable as time goes on. So Richard Pugh and his team have been doing an amazing job exploring that ground. And we're going to drill at least 20,000 metres over the next 12 months there as we look for both a standalone discovery and critical mass of its own resources, knowing full well that those resources are highly valuable right next to a mill. The other thing that makes Strickland really unique in this sector is obviously not only do we have the 2 projects, high quality strategic projects, it's got over $50 million in cash and liquid assets. So Strickland doesn't need to raise a cent of capital. It's fully funded for the next 18 months. And all you're going to get is news flow for every 2 weeks for the next 18 months. Okay, so a little bit about Rogozna. So not many people in Australia know much about Serbia, other than we kicked out Novak Djokovic a couple of years ago, which certainly wasn't a good move for me. Anyway, Serbia, fantastic mining jurisdiction. Europe's second largest copper producer as of this year. Mining going back to Roman times. Where our project is, in the southern part of the country, this is the historic Trepča Mineral District, so one of Europe's largest lead, zinc, silver mining districts. This is a country and an area that is very familiar with mining. Everyone living in proximity to our project has some history with the mines. As I said, we've had 60 million spent on it to date over the last 20 years, including 25 million spent on the project over the last 4 years by Ibera Capital. Over 100,000 metres of drilling, project-wide geophysics and geochemistry, exploration target pipeline of over 20 targets. In terms of the project and the geology, so these are porphyry-related deposits. So, very big magmatic systems, totally different to what you get here in WA, with the slight exception possibly of De Grey in terms of that sort of scale. You get really thick, continuous zones of mineralisation, and I'll show you that in a second. But essentially what we've got here is 185 square kilometres of tenure. We cover about 90% of the mineral system. In WA parlance, that's kind of like the greenstone belt. We've got 90% of it. The other 10% extends over the border into Kosovo. That's owned by Newmont. Okay, so this is the sort of area where the majors want to be. Geologically, these skarn deposits sit pretty much underneath the volcanics that you see in the dark green around the east and the south of the project. So those areas, the mineralisation gets caught underneath the volcanics. All the juices flow through the volcanics. You get big geochemical anomalies, big alteration systems. So when you're doing exploration, those areas light up with geochemistry. They light up with geophysics, make targeting pretty easy. However, in the central part of the project area where we've got younger volcanics, they don't light up with geochemistry. Those volcanics were put in after the mineralising event. So there you need geophysics. So in that area, we've got a heap of blind targets to follow up as well. One of the really cool things about this project is the geo. When you're drilling it, you get really awesome intersections. So you generally get 100 to 400 metre thick, pretty continuous ore zones, ranging 1 to 2 grams sort of gold equivalent. But within that, and this is what's really important for this project, this is the real differentiator compared to porphyries. This project, you get high-grade zones within the bulk tonnage mineralisation. So you get anywhere from 10 metres to 50 metres at sort of 3 to 6 grams gold equivalent, up to 100 metres thick at Medenovac. So those high-grade zones, when you think of it from a mining perspective, if you're an Adriatic Metals, for example, you're going to be focused on those high-grade zones. If you're a Barrick or a Zijin mining or a Newmont mining, you're going to be looking at this as a sub-level cave, chasing those 100 to 400 metre thick ore zones. The other cool thing about the project is the metals mix. We have a slightly different metals mix across all 4 deposits. At Copper Canyon, it's basically 50% copper gold. Gradina's 90% gold. Chenats is 60% gold and 20% copper. And Medenovac is 60% copper and zinc. So each has a slightly different metals mix, but all the test work we've done to date shows they will all be used through one centralised plant. So we don't need 4 different plants. It's only going to need 1 plant for 4 deposits. One of the important things that often gets lost technically about deposits is geometry. So everyone thinks of grade, and grade is obviously very important. Thickness is really important too, and how they come together is geometry. The geometry of these skarn deposits is fantastic. So Chenats is 600 metres long, 500 metres wide, 450 metres vertically, and that's continuous mineralisation. That's all mineralised. And then within that, you get the high-grade zones, which on this section is 25 metres thick, averaging about 3.3 grams gold equivalent. Through the core of this deposit, you get up to 20,000 ounces per vertical metre. That's more than Bellevue gold. Within those high-grade zones, that accounts for roughly 30% of the metal. So about 1.5 million ounces of the Chenats resource sits within those high-grade zones. Medenovac's recent discovery, we discovered this in 2020 and 2021. Previous explorers had drilled around it, but basically didn't drill deep enough. We got some geophysics reprocessed, got a massive anomaly, drilled into the guts of that anomaly, and that's where we hit 350 odd metres at 2 grams gold equivalent. Within that, almost 100 metres at 5 grams gold equivalent. The other excellent thing about Medenovac is the system itself. We've only drilled 600 metres of strike. It's got 2 kilometres. It's got a lot more to go. The target pipeline, over 20 targets. We're going to hit that with 60,000 metres with a real emphasis on discovery. Okay, in terms of the Yandal, as we said earlier, 50 to 60 kilometres. We've got a number of deposits from Jundee, 250,000 ounces currently in resources. Here we're really focused on chasing extra oxide, increasing that to 500,000 ounces. At the same time, we're looking at new discoveries. We're looking to chase Palomino and Bronco, amongst others, down plunge. As we start to drill into the primary mineralisation and start targeting, trying to get to resources to 1 million ounces. As we already know, we've already released some good results this year, so the guys are already onto a good start. Drill hits such as 17 metres at 10 grams, 13 at 5. This is all primary mineralisation. The thing to remember about Yandal is most of the historic drilling here is all shallow. Most of it's less than 100 metres. So anything deeper than 100 metres in this Yandal belt is pretty much a new search space. And so if we want to find new ounces, you've got to look somewhere new. Bronco, we're expecting some results in the coming weeks. Here we think there's real potential for more bulk tonnage volumes. So just in summary, so as we said, well, as Matt said, you know, unicorn. Well, I really believe Strickland is a unicorn company. Canaccord recently put out this research on the junior gold sector, really wanting to see, well, when the love starts to filter down from the large companies into the junior sector, which companies have the best leverage to that? Well, as you can see on this image here, right at the top of this graph is now Strickland, head and shoulders above the rest. And in 12 months' time, that axis on that graph is going to need to be twice as big. Thank you.